Let's get ready for the Nevada real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Nevada Real Estate Law and Practice. Nevada Real Estate Division. What is the primary role of the Nevada Real Estate Division, NRED? Is it A, to regulate fishing activities in Nevada? B, to enforce the rules and regulations of the real estate industry in Nevada? C, to provide loans to prospective homebuyers? Or D, to manage public works projects in Nevada? The answer is B, to enforce the rules and regulations of the real estate industry in Nevada. The Nevada Real Estate Division's main function is to enforce the rules and regulations of the real estate industry in Nevada, overseeing compliance with state laws. What is the role of the Nevada Real Estate Division in real estate education? Is it A, to approve real estate education courses and instructors? B, to provide real estate education free of charge? C, to offer scholarships for real estate students? Or D, to mandate specific textbooks for real estate courses? The answer is A, to approve real estate education courses and instructors. The Nevada Real Estate Division ensures that real estate education programs meet state requirements by approving courses and instructors. This helps maintain the quality and integrity of real estate education in Nevada.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which entity is responsible for enforcing Nevada real estate laws and regulations? Is it A, Nevada Real Estate Division? B, National Association of Realtors? C, Nevada Department of Finance? Or D, Nevada State Bar Association? The answer is A, Nevada Real Estate Division. The Nevada Real Estate Division is responsible for enforcing the rules and regulations of the real estate industry within Nevada, ensuring compliance and protecting consumer interests. Who is responsible for handling complaints against real estate agents in Nevada? Is it A, the Nevada Department of Motor Vehicles? B, the Nevada Real Estate Division? C, the Nevada Public Library? Or D, local homeowners associations? The answer is B, the Nevada Real Estate Division. The Nevada Real Estate Division is responsible for handling complaints and disciplinary actions against real estate professionals. What records must the Nevada Real Estate Division maintain for each licensed real estate agent? Is it A, transaction records and client lists? B, educational requirements and disciplinary actions? C, client feedback and performance reviews? Or D, advertising campaigns and marketing materials? The answer is B, educational requirements and disciplinary actions. The Nevada Real Estate Division is responsible for keeping records of each licensed agent's educational requirements and any disciplinary actions taken against them, ensuring compliance with state regulations. Nevada Licensing and Regulation. What is the minimum age requirement to obtain a real estate salesperson license in Nevada? Is it A, 16 years old? B, 18 years old? C, 21 years old? Or D, 25 years old? The answer is B, 18 years old. In Nevada, the minimum age requirement to apply for and obtain a real estate salesperson license is 18 years old, as stipulated by the Nevada Real Estate Division. How many hours of pre-licensing education are required for a real estate salesperson license in Nevada? Is it A, 30 hours, B, 60 hours, C. 90 hours, or D. 120 hours? The answer is C. 90 hours. Nevada state law mandates that applicants for a real estate salesperson license complete 90 hours of pre-licensing education covering various real estate topics. Who administers the real estate licensing exams in Nevada? Is it A. Nevada Real Estate Division, B. a private testing service, C. Real Estate Commission, or D. Department of Professional Regulation? The answer is B. a private testing service. Nevada contracts with a private testing service to administer the real estate licensing exams, while the Nevada Real Estate Division oversees licensing regulations and standards. How often must a real estate salesperson renew their license in Nevada? Is it A. annually, B. every 2 years, C. every 5 years, or D. every 10 years? The answer is B. every 2 years. In Nevada, real estate salespersons are required to renew their licenses biennially, which helps ensure that licensees stay current with industry standards and continuing education requirements. What is required to reinstate a lapsed real estate salesperson license in Nevada if it has been expired for less than 1 year? Is it A. simply pay the renewal fee, B. complete continuing education and pay a renewal plus reinstatement fee, C. retake the pre-licensing exam, or D. submit a new application? The answer is B. complete continuing education and pay a renewal plus reinstatement fee. If a real estate salesperson license has been expired for less than 1 year in Nevada, the licensee must complete the continuing education requirements and pay both the renewal and reinstatement fees to reinstate their license. What is the maximum number of days allowed to notify the Nevada Real Estate Division of a change in brokerage affiliation? Is it A. 10 days, B. 15 days, C. 30 days, or D. 40 days? The answer is C. 30 days. Licensees in Nevada have a maximum of 30 days to notify the Nevada Real Estate Division about a change in brokerage affiliation according to current regulations.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
What is required to activate a Nevada real estate salesperson license if it has been inactive for more than 2 years? Is it A. complete 36 hours of continuing education, B. submit a new application and fee, C. pass the licensing exam again, or D. provide proof of recent real estate transactions? The answer is C. pass the licensing exam again. In Nevada, a real estate salesperson whose license has been inactive for more than 2 years must pass the licensing exam again to reactivate it, ensuring they are up to date with current laws and practices. What is the continuing education requirement for Nevada real estate salespersons during their first year of licensure? Is it A. 18 hours of post-licensing education, B. 24 hours of continuing education, C. 12 hours of ethics training, or D. no requirements in the first year? The answer is A. 18 hours of post-licensing education. Newly licensed Nevada real estate salespersons are required to complete 18 hours of post-licensing education during their first year to ensure they understand the practical aspects of their new profession. Fair housing laws in Nevada. What is the main purpose of the Nevada Fair Housing Act? Is it A. to regulate the process of home appraisals, B. to eliminate discrimination in housing transactions, C. to provide funding for affordable housing projects, or D. to establish licensing requirements for real estate agents? The answer is B. to eliminate discrimination in housing transactions. The Nevada Fair Housing Act aims to ensure that discrimination on the basis of race, color, religion, sex, disability, familial status, or national origin does not occur in housing-related activities. Which of the following is a protected class under Nevada fair housing laws? Is it A, marital status, B, religion, C, occupation, or D, educational background? The answer is B, religion. Under Nevada fair housing laws, protected classes include race, color, religion, sex, disability, familial status, and national origin to prevent housing discrimination. What actions are prohibited under the Nevada Fair Housing Act? Is it A, refusing to negotiate for housing based on race, B, requiring a credit check for all housing applicants, C, setting minimum income requirements for tenants, or D, offering housing incentives? The answer is A, refusing to negotiate for housing based on race. The Nevada Fair Housing Act prohibits actions such as refusing to negotiate for housing based on race, as well as other discriminatory practices based on the protected classes. What agency enforces fair housing laws in Nevada? Is it A, Nevada Social Services Department, B, Nevada Department of Housing, C, Nevada Real Estate Division, or D, Nevada Consumer Protection Agency? The answer is C, Nevada Real Estate Division. The Nevada Real Estate Division is the agency tasked with enforcing fair housing laws in Nevada, ensuring compliance with anti-discrimination statutes. Under Nevada fair housing laws, can a real estate agent refuse to show a home to a family with children? Is it A, yes, if the home is in an adults-only community, B, no, children can never be excluded, C, yes, if the landlord requests it, or D, no, unless the family agrees? The answer is A, yes, if the home is in an adults-only community. Under Nevada fair housing laws, exemptions exist for housing designated for older persons, allowing exclusion based on familial status. These exemptions must meet specific criteria. Which of the following groups is not protected under Nevada fair housing laws? Is it A, race, B, color, C, age, or D, national origin? The answer is C, age. Nevada fair housing laws protect classes including race, color, national origin, religion, sex, familial status, and disability, but do not specifically include age as a protected class. What must a property owner do to comply with Nevada fair housing laws when advertising a rental property? Is it A, mention that they prefer older tenants, B, state clearly that all applicants are welcome, C, indicate that pets are not allowed, or D, highlight that the property is in a family-friendly area? The answer is B, state clearly that all applicants are welcome. Under Nevada fair housing laws, advertisements for rental properties must be inclusive and avoid language that could be seen as discriminatory. Using welcoming language helps ensure compliance. Nevada Revised Statutes. Which entity is responsible for the regulation of real estate practices in Nevada? Is it A, Nevada Department of Revenue, B, Nevada Real Estate Division, C, Nevada Department of Commerce, or D, Nevada Housing Authority? The answer is B, Nevada Real Estate Division. The Nevada Real Estate Division regulates and licenses real estate brokers, salespersons, and others involved in the real estate industry to ensure compliance with Nevada statutes and regulations. What is the Nevada Revised Statute that governs the licensing of real estate professionals in the state? Is it A, NRS 490, B, NR 13, C, NRS 645, or D, NRS 354? The answer is C, NRS 5. NRS 645 is the Nevada Revised Statute that details the requirements for licensing, the responsibilities of licensees, and regulatory compliance for real estate professionals. Who must disclose a known adverse material fact in a real estate transaction in Nevada? Is it A, only the seller, B, only the buyer, C, both the seller and the real estate agent, or D, only the real estate agent? The answer is C, both the seller and the real estate agent. Nevada law requires that both the seller and the real estate agent disclose any known adverse material facts about the property, helping to prevent fraud and protect buyers in the transaction. What is required under Nevada law when a real estate licensee represents both the buyer and seller in a transaction? Is it A, written consent from both parties, B, disclosing the dual representation verbally to both parties, C, no specific requirement as long as the licensee acts fairly, or D, approval from the Nevada Real Estate Commission? The answer is A, written consent from both parties. Nevada law requires that a real estate licensee obtain written consent from both the buyer and seller when representing both parties in a transaction. This ensures all parties are aware and have consented to the dual representation, as per NRS 645.252. According to Nevada revised statutes, what must be included in a brokerage agreement for it to be enforceable? Is it A, an expiration date, B, a commission rate that does not exceed state limits, C, the signature of the buyer only, or D, verbal agreement between the broker and the client? The answer is A, an expiration date. The Nevada revised statutes require that a brokerage agreement must contain an expiration date to be enforceable. This ensures that both parties understand the duration of the agreement and any obligations therein, as per NRS 645.320. Real estate contracts in Nevada. What is required for a real estate contract to be enforceable in Nevada? Is it A, only verbal agreement, B, written contract, C, witnesses, or D, attorney's signature? The answer is B, written contract. In Nevada, real estate contracts must be in writing to satisfy the statute of frauds, which helps prevent fraud and misunderstandings. Which of the following is not a necessary component of a valid real estate contract in Nevada? Is it A, offer and acceptance, B, consideration, C, competent parties, or D, witnesses? The answer is D, witnesses. In Nevada, a valid real estate contract requires offer and acceptance, consideration, competent parties, lawful object, and a written format. Witnesses are not a necessary requirement. In Nevada, how long does a seller have to provide the buyer with the property condition disclosure form? Is it A, 24 hours before closing, B, within 5 days of signing the contract, C, within 10 days of signing the contract, or D, at least 14 days before closing? The answer is C, within 10 days of signing the contract. According to Nevada law, the seller must provide the buyer with the property condition disclosure form within 10 days of the contract signing. This ensures the buyer is informed about property conditions. Which of the following would not void a real estate contract in Nevada? Is it A, fraudulent misrepresentation, B, mistake of fact, C, unilateral mistake, or D? The answer is C, unilateral mistake. In Nevada, a unilateral mistake where only one party is mistaken about a fact typically does not void a real estate contract, unlike fraud, duress, or a mutual mistake of fact. What does the time is of the essence clause signify in Nevada real estate contracts? Is it A, deadlines are flexible, B, deadlines must be met, C, due dates can be renegotiated, or D, extensions are automatic? The answer is B, deadlines must be met. The time is of the essence clause in Nevada real estate contracts means that all specified deadlines are critical and must be strictly observed, or the contract could be terminated. What is the minimum age required to enter into a real estate contract in Nevada? Is it A, 16 years old, B, 18 years old, C, 21 years old, or D, 23 years old? The answer is B, 18 years old. In Nevada, the legal age to enter into a binding real estate contract is 18 years old, as per the state's legal majority age. Which of the following parties has the legal authority to sign a real estate contract in Nevada? Is it A, a minor, B, an emancipated minor, C, a temporary visitor, or D, an incapacitated person without a guardian? The answer is B, an emancipated minor. An emancipated minor has legal rights similar to an adult, including the ability to enter into binding contracts. What term refers to a mutual agreement to cancel a real estate contract without penalty in Nevada? Is it A, revocation, B, rescission, C, breach, or D, forfeiture? The answer is B, rescission. Rescission is a remedy in contract law allowing all parties to a contract to cancel it and return to their original positions before the contract. Disclosures required by Nevada law. What is required to be included in a Nevada seller's real property disclosure form? Is it A, a detailed report of the property's rental history, B, any known defects or conditions affecting the property, C, a list of all previous owners of the property, or D, the appraised value of the property from the past 5 years? The answer is B, any known defects or conditions affecting the property. Sellers in Nevada must disclose all known defects or conditions affecting the property in the seller's real property disclosure form. This is to ensure that buyers are aware of any issues before purchasing the property. If a property in Nevada is located within a common interest community, CIC, what additional disclosure must the seller provide? Is it A, a copy of the community's budget, B, the name of all board members of the CIC, C, a resale package containing the community's CC&Rs, financial statements, and assessment information, or D, a history of noise complaints in the community? The answer is C, a resale package containing the community's CC&Rs, financial statements, and assessment information. Nevada law mandates that sellers of property within a CIC provide a resale package to the buyer, which includes the community's covenants, conditions, and restrictions, financial statements, and any assessment information. Which statement best describes the requirement for disclosing the presence of radon gas in Nevada residential real estate transactions? Is it A, radon disclosure is not required under Nevada law, B, sellers must test for radon and disclose the results before selling the property, C, sellers must disclose known presence of radon gas if it exceeds the EPA action level, or D, sellers are required to install radon mitigation systems before selling the property? The answer is C, sellers must disclose known presence of radon gas if it exceeds the EPA action level. Nevada law requires sellers to disclose the known presence of radon gas if it exceeds the Environmental Protection Agency action level. This ensures potential buyers are aware of any latent health risks. What must Nevada sellers disclose about the presence of HIV/AIDS in former property occupants? Is it A, sellers must disclose the presence of HIV/AIDS to potential buyers, B, sellers can choose whether to disclose the presence of HIV/AIDS, C, sellers are prohibited from disclosing the presence of HIV/AIDS due to privacy laws, or D, sellers must obtain permission from former occupants to disclose their health status? The answer is C, sellers are prohibited from disclosing the presence of HIV/AIDS due to privacy laws. Nevada property disclosure laws prohibit sellers from disclosing the presence of HIV/AIDS in former occupants due to privacy protections, ensuring potential buyers do not receive this sensitive personal health information. What must be disclosed by Nevada sellers when the property is located in a flood zone? Is it A, nothing, as flood zones do not impact property disclosures? B, only if the property has ever experienced flooding? C, sellers must disclose the property's location in a flood zone and potential flood risks? Or D, only if the property does not have flood insurance? The answer is C. Sellers must disclose the property's location in a flood zone and potential flood risks. Nevada requires sellers to disclose if the property is located in a flood zone, allowing potential buyers to understand risks and make informed decisions regarding flood insurance and property suitability. What is required to be disclosed about noise mitigation measures in Nevada property sales? Is it A, all measures taken to reduce external noise must be disclosed? B, only noise mitigation measures taken within the last year need to be disclosed? C, noise mitigation measures do not need to be disclosed? Or D, only permanent noise mitigation measures need to be disclosed? The answer is A, all measures taken to reduce external noise must be disclosed. Under Nevada law, sellers must disclose any measures taken to reduce external noise to ensure the buyer is fully informed about the property's condition.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Transfer of title in Nevada. What document is typically used to transfer ownership of real property in Nevada? Is it A, deed, B, lease, C, title, or D, mortgage? The answer is A, deed. In Nevada, a deed is the legal document used to transfer ownership of real property from one party to another, ensuring that the transfer is recorded and recognized by law. Which type of deed provides the greatest level of protection to the buyer? Is it A, quitclaim deed, B, bargain and sale deed, C, warranty deed, or D, grant deed? The answer is C, warranty deed. A warranty deed is the most protective for a buyer as it ensures the grantor guarantees clear title and covers any potential title defects or claims. Nevada requires deeds to be notarized before they can be recorded. Why is notarization important? Is it A, it verifies the identities of the parties involved? B, it assesses the property's value? C, it ensures the property is free of encumbrances? Or D, it appraises the future market trends of the property? The answer is A, it verifies the identities of the parties involved. Notarization is a key step in the recording of deeds, as it provides assurance that the individuals signing the document are who they claim to be, thereby preventing fraud. In Nevada, what is the term for the person who transfers property through a deed? Is it A, grantor, B, C, trustee, or D, mortgagor? The answer is A, grantor. In a property transfer, the person who conveys the property rights is known as the grantor, while the recipient is the grantee. What must a deed include to be considered valid in Nevada? Is it A, consideration, legal description of the property, and signatures of the grantor and grantee? B, grantor's signature, acknowledgement, notarization, and a valid legal description of the property? C, grantor's signature, grantee's signature, and a property appraisal? Or D, a survey of the property, power of attorney, and witnesses' signatures? The answer is B, grantor's signature, acknowledgement, notarization, and a valid legal description of the property. To be valid, a deed in Nevada must include the grantor's signature, acknowledgement by a notary, and a precise legal description of the property being transferred. What is the primary purpose of recording a deed in Nevada? Is it A, to acknowledge the property transfer in front of witnesses? B, to provide legal protection by giving constructive notice to the public? C. To avoid paying property taxes on the transferred property. Or D. To allow the property to be used as collateral for a loan. The answer is B. To provide legal protection by giving constructive notice to the public. In Nevada, recording a deed provides constructive notice to the public of the property transfer, which is crucial for protecting the grantee's legal rights against subsequent claims. Earnest money in escrow in Nevada. Who is responsible for ensuring that a buyer's earnest money is deposited into escrow within the required time frame? Is it A, the buyer, B, the seller, C, the broker, or D, the lender? The answer is C, the broker. In Nevada, the broker is responsible for ensuring that the buyer's earnest money is deposited into the escrow account within the specified time frame, typically 1 business day after the contract is signed. What happens to the earnest money if the buyer defaults on the purchase agreement in Nevada? Is it A, the buyer receives a full refund, B, the seller keeps the earnest money as liquidated damages, C, the broker keeps the earnest money, or D, the money is donated to a charity? The answer is B, the seller keeps the earnest money as liquidated damages. In Nevada, if a buyer defaults on the purchase agreement, the seller typically retains the earnest money as liquidated damages to compensate for taking the property off the market. How should a broker handle earnest money if a real estate transaction falls through and the parties dispute its distribution in Nevada? Is it A, keep the earnest money indefinitely, B, consult legal counsel and follow escrow instructions, C, return the earnest money to the buyer automatically, or D, distribute the earnest money equally between buyer and seller? The answer is B, consult legal counsel and follow escrow instructions. If a dispute arises over the earnest money, the broker should consult legal counsel and follow the escrow instructions or seek mediation to resolve the issue as per Nevada law. Within how many business days must a Nevada broker deposit earnest money into the escrow account after receiving it? Is it A, 1 business day, B, 3 business days, C, 5 business days, or D, 7 business days? The answer is A, 1 business day. Nevada real estate law mandates that brokers must deposit earnest money into the escrow account within 1 business day of receipt to ensure proper handling and compliance with regulations. What is the main purpose of earnest money in a real estate transaction in Nevada? Is it A, to serve as a down payment, B, to compensate the broker, C, to demonstrate the buyer's good faith, or D, to cover closing costs? The answer is C, to demonstrate the buyer's good faith. Earnest money serves to demonstrate the buyer's good faith and commitment to the purchase, giving the seller assurance that the buyer is serious about closing the deal. What is the maximum amount a broker can use from their own funds to maintain an escrow account in compliance with Nevada law? Is it A, $1,000, B, $1,500, C, $2,500, or D, $500? The answer is D, $500. To ensure brokers separate personal and client funds, Nevada law permits brokers to use up to $500 of their own money to maintain the operational function of an escrow account.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Nevada real estate taxes. What is the primary basis for determining property tax in Nevada? Is it A, sales price of the property, B, assessed value of the property, C, income generated from the property, or D, size of the property? The answer is B, assessed value of the property. Nevada property taxes are calculated using the assessed value of the property, which is determined as a percentage of the appraised value. This process ensures that tax amounts are based on the market value of the property. How often are property taxes typically reassessed in Nevada? Is it A, annually, B, every 2 years, C, every 3 years, or D, every 5 years? The answer is C, every 3 years. In Nevada, property values for tax purposes are generally reassessed every 3 years. This helps ensure that property taxes reflect current market conditions and property values. Which entity is responsible for appraising property values for tax purposes in Nevada? Is it A, Nevada State Treasurer, B, County Assessor's Office, C, Nevada Department of Taxation, or D, local real estate agent? The answer is B, County Assessor's Office. The County Assessor's Office in each Nevada county is tasked with appraising properties for tax purposes. They determine the assessed value, which is used to calculate property taxes. What is the maximum annual increase allowed for property tax on owner-occupied residences in Nevada? Is it A, 1%, B, 3%, C, 5%, or D, 7%? The answer is B, 3%. In Nevada, property taxes for owner-occupied residences cannot increase by more than 3% per year. This cap helps protect homeowners from sudden spikes in property tax liabilities. What is the deadline for paying the first installment of property taxes in Nevada? Is it A, January 1st, B, July 1st, C, August 1st, or D, December 1st? The answer is C, August 1st. The first installment of property taxes in Nevada is due by August 1st each year. Paying on time is crucial to avoid penalties and interest charges. When are Nevada property taxes due? Is it A, monthly, B, quarterly, C, annually, or D, biannually? The answer is B, quarterly. In Nevada, property taxes are typically due quarterly, with specific due dates throughout the year. These installments help manage tax payments more effectively. Nevada real estate finance. Loan fundamentals. In Nevada, what is the primary purpose of a mortgage loan's acceleration clause? Is it A, to reduce the interest rate, B, to lengthen the loan term, C, to demand immediate repayment of the entire loan balance, or D, to secure a lower monthly payment amount? The answer is C, to demand immediate repayment of the entire loan balance. The acceleration clause in a mortgage loan allows the lender to defer repayment of the loan balance if the borrower defaults, providing lenders a way to protect their investment. What is the main function of escrow in a real estate loan transaction in Nevada? Is it A, to allow the buyer to take possession of the property before closing, B, to hold funds and documents until all conditions of the sale are met, C, to guarantee the property's title is free of encumbrances, or D, to negotiate the terms of the loan? The answer is B, to hold funds and documents until all conditions of the sale are met. Escrow ensures all conditions of a real estate transaction are met before releasing funds and documents to finalize the sale, providing security for both buyers and sellers. In Nevada, what is a deed of trust typically used for? Is it A, transferring property ownership, B, securing a loan with the property as collateral, C, listing the property for sale, or D, transferring mineral rights? The answer is B, securing a loan with the property as collateral. A deed of trust involves the borrower, lender, and trustee, where the trustee holds the title until the loan is repaid, providing security for the lender. What does the term LTV, loan-to-value ratio, represent in Nevada real estate finance? Is it A, the total cost of the loan, B, the ratio of the loan amount to the appraised value of the property. C, the number of years to repay the loan. Or D, the monthly mortgage payment. The answer is B, the ratio of the loan amount to the appraised value of the property. The loan-to-value (LTV) ratio is crucial in real estate finance, showcasing the loan amount as a percentage of the property's appraised value, impacting both lender risk and loan terms. Which component of an adjustable-rate mortgage in Nevada is designed to keep payments stable? Is it A, the initial interest rate, B, the adjustment frequency, C, the margin, or D, the interest rate cap? The answer is D, the interest rate cap. Interest rate caps in ARMs protect borrowers by setting maximum limits on rate increases, ensuring that monthly payments do not become unmanageably high, thereby offering some financial predictability. What is the purpose of a prepayment penalty clause in a Nevada real estate loan agreement? Is it A, to penalize the borrower for making late payments, B, to incentivize borrowers to refinance their loan at a lower interest rate, C, to compensate the lender for the loss of interest payments if the loan is paid off early, or D, to reduce the loan's principal more quickly? The answer is C, to compensate the lender for the loss of interest payments if the loan is paid off early. A prepayment penalty clause in Nevada compensates lenders for the loss of expected interest income when a borrower pays off a loan before the agreed term. It typically occurs in fixed-rate loans. What is the primary role of private mortgage insurance (PMI) in Nevada real estate finance? Is it A, to reduce the interest rate on the mortgage, B, to insure the property against natural disasters, C, to protect the lender from losses if the borrower defaults on the loan, or D, to provide an escrow account for property tax payments? The answer is C, to protect the lender from losses if the borrower defaults on the loan. Private mortgage insurance in Nevada is designed to protect lenders from losses if a borrower defaults on a loan, particularly when the down payment is less than 20%. It facilitates homeownership for buyers with lower down payments. What does the term points refer to in Nevada real estate loan finance? Is it A, charges that cover property taxes, B, fees paid to reduce the loan's interest rate, C, costs for home insurance, or D, prepayment penalties? The answer is B, fees paid to reduce the loan's interest rate. In Nevada, points refer to fees paid up front to reduce the interest rate on a mortgage. Each point is typically 1% of the loan amount and can help lower monthly payments. Loan types, such as conventional, FHA, VA, and others. Which type of loan does not require a down payment and is guaranteed by the federal government? Is it A, conventional loan, B, a Federal Housing Administration loan, FHA, C, Veterans Affairs loan, VA, or D, jumbo loan? The answer is C, Veterans Affairs loan, VA. A VA loan is a mortgage loan available to U.S. veterans, service members, and not requiring a down payment. It is provided by private lenders but guaranteed by the U.S. Department of Veterans Affairs. What is the primary characteristic of an FHA loan? Is it A, no down payment required, B, guaranteed by the Veterans Affairs, C, lower down payment and credit score requirements, or D, higher interest rates? The answer is C, lower down payment and credit score requirements. FHA loans are designed to help more people become homeowners, requiring lower down payments and credit scores compared to conventional loans, and are insured by the Federal Housing Administration. Which loan type is typically used for higher-priced properties that exceed conforming loan limits? Is it A, conventional loan, B, a Federal Housing Administration loan, FHA, C, Veterans Affairs loan, VA, or D, jumbo loan? The answer is D, jumbo loan. Jumbo loans are designed for higher-priced properties that exceed the lending limits set by Fannie Mae and Freddie Mac, typically requiring better credit profiles and higher down payments. What distinguishes a conventional loan from other types of mortgage loans? Is it A, it is insured by a government agency? B, it can only be used for primary residences? C, it frequently requires private mortgage insurance, PMI, if the down payment is less than 20%. Or D, it is available only to first-time homebuyers? The answer is C. It frequently requires private mortgage insurance, PMI, if the down payment is less than 20%. A distinguishing feature of conventional loans is that they typically require private mortgage insurance, PMI, when the borrower makes a down payment of less than 20% of the home's purchase price. Which of the following best describes a conforming loan? Is it A, a loan with no maximum limit? B, a loan that meets the guidelines set by Fannie Mae and Freddie Mac? C, a loan specifically guaranteed by the Federal Housing Administration? Or D, a loan that has no requirement for private mortgage insurance? The answer is B, a loan that meets the guidelines set by Fannie Mae and Freddie Mac. Conforming loans are those that meet the guidelines, including loan limits, established by Fannie Mae and Freddie Mac, making them eligible for purchase by these entities in the secondary mortgage market. What is a key benefit of a VA loan for veterans? Is it A, lower interest rates? B, no down payment requirement? C, no mortgage insurance required? Or D, higher loan limits? The answer is B, no down payment requirement. VA loans offer veterans the advantage of not needing a down payment, making homeownership more accessible. Loan qualifications. Which of the following is a key requirement for a borrower to qualify for a conventional loan in Nevada? Is it A, a minimum credit score of 620? B, a debt-to-income ratio of at least 50%? C, an active military status? Or D, residency in Nevada for at least 2 years? The answer is A, a minimum credit score of 620. To qualify for a conventional loan, borrowers usually need a minimum credit score of 620 and a manageable debt-to-income ratio. Conventional loans do not require military status or state residency for any specific period. What is the maximum allowable debt-to-income (DTI) ratio for qualifying for a Federal Housing Administration FHA loan in Nevada? Is it A, 31%, B, 43%, C, 50%, or D, 55%? The answer is C, 50%. For FHA loans, the maximum allowable debt-to-income ratio is typically 50%, divided into front-end, housing expenses, and back-end, total debt ratios. This allows greater flexibility in qualifying borrowers. Which factor is least likely to affect an applicant's ability to qualify for a VA loan in Nevada? Is it A, military service status? B, property location within Nevada? C, financial stability and credit history? Or D, homeowner's insurance policy? The answer is D, homeowner's insurance policy. Homeowner's insurance, while necessary for protecting the property, is not a factor in qualifying for a VA loan. Service status, property location, and financial stability are more critical factors. What type of income documentation is typically required for self-employed borrowers to qualify for a mortgage in Nevada? Is it A, most recent paycheck stubs? B, profit and loss statements and tax returns? C, a letter from an employer? Or D, verification of retirement benefits? The answer is B, profit and loss statements and tax returns. Self-employed borrowers need to provide profit and loss statements and at least 2 years of tax returns to demonstrate their income stability and reliability when applying for a mortgage. Which program limits the maximum amount borrowers can earn to qualify for assistance in Nevada? Is it A, conventional loan programs, B, Federal Housing Administration, FHA loan programs, C, Nevada Housing Division grant program, or D, Veterans Affairs loan programs? The answer is C, Nevada Housing Division grant program. The Nevada Housing Division grant program often has income limits to ensure it assists low to moderate income families. Conventional FHA and VA loan programs do not typically include income limits, but may have other eligibility criteria. What is a common credit score requirement for obtaining a conventional loan in Nevada? Is it A, 500, B, 580, C, 620, or D, 700? The answer is C, 620. For conventional loans, lenders generally require a minimum credit score of 620. This ensures borrowers are less risky and more likely to repay the loan. The loan application process. What is typically the first step in the loan application process for a Nevada real estate transaction? Is it A, pre-qualification, B, property appraisal, C, underwriting analysis, or D, loan closing? The answer is A, pre-qualification. Pre-qualification helps the borrower understand their borrowing power and budgets, making it a foundational step in the loan application process before proceeding with more detailed assessments. Which document is essential for verifying a borrower's income during the loan application process? Is it A, credit report, B, employment verification letter, C, pay stubs, or D, property deed? The answer is C, pay stub. Pay stubs are crucial for verifying a borrower's income as they provide detailed information about wages and earnings, which is necessary to assess the borrower's ability to repay the loan. What is the primary purpose of the debt-to-income DTI ratio in the loan application process? Is it A, to determine the property value, B, to evaluate the borrower's repayment capacity, C, to verify employment status, or D, to assess credit score? The answer is B, to evaluate the borrower's repayment capacity. The debt-to-income ratio helps lenders determine if the borrower has sufficient income to manage new loan payments in addition to existing obligations, crucial for assessing repayment capacity. Which federal form is used to apply for a mortgage loan in Nevada? Is it A, Form 1003, B, Form number 4506T, C, Form W2, or D, Form 1099? The answer is A, Form 1003. Form 1003, or the Uniform Residential Loan Application, is the industry standard form used by most mortgage lenders to record borrower information and evaluate mortgage applications. Why is it important for a borrower to obtain a good faith estimate, GFE, during the loan application process? Is it A, to understand potential loan terms, including interest rate and monthly payments, B, to verify their employment status, C, to assess the property's market value, or D, to determine credit score? The answer is A, to understand potential loan terms, including interest rate and monthly payments. A good faith estimate, GFE, outlines the estimated costs and terms associated with the mortgage loan, allowing the borrower to understand potential financial obligations and compare loan offers from different lenders. Which document is commonly required to verify a borrower's employment during the loan application process in Nevada? Is it A, bank statements, B, pay stubs, C, credit report, or D, tax returns? The answer is B, pay stub. During the loan application process, pay stubs are typically requested by lenders to verify employment and income directly, aiding in loan qualification. Underwriting for Nevada real estate. In Nevada, what is the primary purpose of real estate underwriting? Is it A, to determine the market value of a property, B, To evaluate the risk of lending to a borrower. C. To advertise real estate services. Or D. To enforce real estate contracts. The answer is B. To evaluate the risk of lending to a borrower. Underwriting in Nevada real estate finance involves assessing the risk of lending to borrowers, ensuring loans are made to those who can reasonably be expected to repay. Which entity primarily oversees real estate finance and underwriting practices in Nevada? Is it A. Nevada Housing Division, B. Nevada Department of Taxation, C. Nevada Real Estate Division, or D. Nevada Department of Transportation? The answer is C. Nevada Real Estate Division. The Nevada Real Estate Division is the primary regulatory body concerning real estate practices, including finance and underwriting, ensuring compliance with state laws and regulations. What is a key factor underwriters examine when assessing a borrower's loan application in Nevada? Is it A. Property's aesthetic appeal, B. Borrower's employment history, C. Property's ownership history, or D. Local crime rates? The answer is B. Borrower's employment history. Underwriters review a borrower's employment history to gauge income stability and loan repayment ability, crucial for determining lending risk. How does a high debt-to-income ratio affect a borrower's loan application in Nevada? Is it A. Easily secures a low-interest loan, B. Can lead to loan rejection, C. Guarantees loan approval, or D. Is irrelevant to the underwriting process? The answer is B. Can lead to loan rejection. A high debt-to-income ratio is a red flag for underwriters, impacting loan approval as it indicates higher financial risk and potential difficulty for the borrower in handling new debt. Why is a borrower's credit score important in Nevada real estate underwriting? Is it A. It determines the property's market value, B. It reflects the borrower's loan repayment history, C. It affects the architectural style of the property, or D. It ensures compliance with zoning laws? The answer is B. It reflects the borrower's loan repayment history. Credit scores provide underwriters with a quick overview of a borrower's financial health and repayment history, essential for assessing the likelihood of loan repayment. What is a key purpose of loan-to-value LTV ratio in Nevada real estate underwriting? Is it A. To determine the property's market value, B. To assess the risk to lenders, C. To evaluate the borrower's creditworthiness, or D. To finalize the loan interest rate? The answer is B. To assess the risk to lenders. The LTV ratio is crucial in assessing the lender's risk. A higher LTV indicates more risk since the loan amounts to a higher percentage of the property's value, which can affect financing terms. Loan closing. What document is typically used to detail the prorations for items such as property taxes and homeowners' dues during a Nevada loan closing? Is it A. Settlement statement, B. Promissory note, C. Deed of trust, or D. Title commitment? The answer is A. Settlement statement. A settlement statement, also known as a closing statement, lists all the costs and prorations involved in a real estate transaction, ensuring both buyer and seller know their financial obligations. In Nevada, which party is responsible for delivering the loan documents to the escrow agent? Is it A. Borrower, B. Lender, C. Seller, or D. Real estate agent? The answer is B. Lender. In Nevada, the lender is responsible for preparing and sending all necessary loan documents directly to the escrow agent to facilitate the closing process. What is the main purpose of the final walkthrough inspection before closing in Nevada real estate transactions? Is it A. To renegotiate the sale price, B. To ensure agreed-upon repairs have been made, C. To appraise the property's value, or D. To review and sign closing documents? The answer is B, to ensure agreed-upon repairs have been made. The final walkthrough in Nevada real estate transactions ensures that the property is in the agreed-upon condition and that any requested repairs have been completed before closing. What is the significance of the closing disclosure in Nevada loan closings? Is it A, it lists the previous owners of the property? B, it details the terms of the buyer's new loan? C, it transfers ownership from seller to buyer? Or D, it provides a property survey? The answer is B, it details the terms of the buyer's new loan. The closing disclosure is a critical document in Nevada loan closings, detailing the final terms and costs of the mortgage loan and ensuring both buyer and lender understand their financial obligations. In Nevada, what does RESPA require regarding the delivery of the closing disclosure? Is it A, it must be delivered on the day of closing? B, it must be delivered within 1 week after closing? C, it must be delivered 3 business days before closing? Or D, it must be delivered 1 month before closing? The answer is C, it must be delivered 3 business days before closing. Under the Real Estate Settlement Procedures Act, RESPA, the closing disclosure must be delivered to the borrower at least 3 business days before the closing date to allow time for review and to address any discrepancies. Which document is often used to transfer property ownership from seller to buyer during a Nevada real estate closing? Is it A, warranty deed? B, mortgage note? C, loan estimate? Or D, purchase agreement? The answer is A, warranty deed. In Nevada real estate transactions, a warranty deed is commonly used to transfer the property ownership from the seller to the buyer. This document guarantees clear title to the property. Nevada mortgage disclosure requirements. Which document is required to be provided to a borrower to disclose the terms of a mortgage loan in Nevada? Is it A, good faith estimate? B, loan estimate? C, mortgage note? Or D, closing disclosure? The answer is B, loan estimate. In Nevada, under TRID regulations, the loan estimate form must be provided to the borrower within 3 days of receiving a loan application to disclose the key terms of a mortgage loan. What is the main purpose of the closing disclosure form? Is it A, to estimate the borrower's monthly payments? B, to list the buyer's credit score? C, to provide final details about the loan and closing costs? Or D, to disclose any potential property defects? The answer is C, to provide final details about the loan and closing costs. The closing disclosure must be provided to the borrower at least 3 days before closing. It includes detailed final terms of the loan, closing costs, and provides transparency into the transactional specifics. Under Nevada law, when must the loan estimate form be delivered to a borrower? Is it A, within 3 business days of receiving a loan application? B, within 7 business days of receiving a loan application? C, at least 3 business days before closing? Or D, at the time of loan funding? The answer is A, within 3 business days of receiving a loan application. The TRID regulations require lenders to provide the loan estimate within 3 business days of receiving a loan application to ensure borrower awareness of key loan terms early in the process. Which of the following is a prohibited practice under Nevada mortgage disclosure regulations? Is it A, failing to provide a loan estimate? B, offering a loan at lower interest rates? C, charging origination fees? Or D, requiring upfront payment for appraisals? The answer is A, failing to provide a loan estimate. Nevada mortgage disclosure regulations, in accordance with federal TRID guidelines, mandate the provision of the loan estimate to ensure transparency and prevent misleading practices regarding loan terms and costs. What is the time frame for the delivery of a closing disclosure before the closing date under Nevada's TRID regulations? Is it A, 1 day, B, 3 business days, C, 5 business days, or D, 7 business days? The answer is B, 3 business days. Nevada's adoption of TRID regulations means borrowers must receive the closing disclosure at least 3 business days prior to closing, providing an opportunity for review and any necessary corrections. Which form must a lender provide to a borrower within 3 business days of receiving a loan application in Nevada? Is it A, closing disclosure, B, good faith estimate, C, loan estimate, or D, truth in lending statement? The answer is C, loan estimate. Under the TILA-RESPA Integrated Disclosure Rule, the loan estimate form must be provided to borrowers within 3 business days after they submit a loan application.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.